So I'm delighted to have back my friend Jeff Marsico, the president of the Kafafian group, for another NedTalks. The last one, Jeff, I think was right after you had published your book on how community bankers can be first responders, which I thought was a wonderful collection of thoughts and insights. I applaud you for pulling that off.
Yeah, thank you. That subtitle came from actually Elena McWilliams, the former FDIC chair at the time. So I can't claim ownership.
Well, the Kafafian Group, in my experience over the last decades, has done tremendous work to try to raise the bar for community banks and has given them all kinds of insights into what they can do better. And Jeff, as the president, has been engaged by hundreds and has a rather unique perspective, I think, on the industry. And he was ruminating not too long ago about things he wished community banks could do better. And so that's the topic that we're going to talk about today. So Jeff, what are some things community banks could do better?
Well, just to enumerate them, Ned, number one would be project management. We could talk about that in a little more detail. Data is number two. Employee development is number three. Serve a higher purpose is number four, and stakeholder primacy is number five. I suppose the last two will go in, serving a higher purpose, I think, is almost something that the new employee base wishes their corporations would do. If you look at companies like Bombas socks, where you buy a pair of socks and another pair gets donated to homeless shelters, because that's the number one ask if homeless shelters is socks. Those employees of Bombas have to believe in that mission. They're likely to stay at that company and really enjoy their work, going to work every day. It's not just the 9 to 5 for them. And stakeholder primacy means that you elevate the importance of all of your stakeholders to one flat plane, meaning not just shareholders, but also employees, customers, and communities. So if you elevate them and you work that stakeholder primacy correct, you could actually have better returns, better customer experiences, keep employees longer that you want to keep. It all is synergistic, and you would deliver to all of your stakeholders instead of one particular constituency. It'd be quite a grind for somebody to say, I'm coming into work every day just for the benefit of my shareholders. They like that stakeholder primacy. So those last two are important, but I think what you like to focus on is the project management, data, and employee development piece for your audience.
I am, because as everybody listening to this knows, I'm interested primarily in the sales side and what frontline people can and should do. And that includes managers of sales teams, whether they're commercial teams or branch teams. So I think these three that you highlighted initially, project management, data, and employee development, are right front and center for a lot of sales managers, at least that I'm dealing with. So let's talk a little bit about project management.
Yeah, so this topic came up when I went to a bank director conference, Acquire or Be Acquired, and the nCino person was on a panel saying that implementation of the nCino solution should take about 4 months, to which I thought that perhaps in Arizona, where the conference was taking place, that weed was legal. And he had
I was going to say, or everybody was drunk and didn't hear what the guy actually said.
Yeah, because I know of no bank that implemented nCino in 4 months. In fact, we know banks that it's almost like a perpetual implementation cycle there. But we can't, the industry's moving now too fast for us to take 1.5 years to put a loan operating system up and running and actually using it. We sometimes when we do projects, we only have 5 people at our financial institution that could do them. And that gets to the employee development. They're all interrelated there. In that, decision-making is so tightly held in the institution that projects just take a long time, because you have to access the decision maker on every waypoint of the project. Well, projects really should have an executive sponsor that should be empowered to make those tough decisions, but the middle manager should be the one, the manager of the project team, and all of the project stakeholders should be the doers in it. If a bank was doing it right, they probably would have 2 or 3 project management teams with the bandwidth to be able to execute on projects. A lot of folks, they run at low to no additional bandwidth to take on projects because they have their day jobs. But if they really took a critical eye at what they're doing, why they're doing it, or can technology do it in its place, they could free up a lot of bandwidth, in my opinion, to have that ability to execute more on projects. And that gets down all the way to the doer level. So, we have to be able to, in the presentation that I put, I cited Mike Butler of Grasshopper Bank that did a core processor conversion in 4 months from signing the contract to flipping the on switch. So, and Grasshopper Bank is not a very big bank in New York City. So it's not like they have FTEs all over the place that they could pull from, but he just is able to implement projects very quickly. So I think that is going to be very important for the enduring futures that we're trying to advise our clients to build upon, is to turn that project management, which is a weakness of your financial institution, into a strength of your financial institution, because change is going to continue to happen. And if we're going to manage change, we have to be able to manage projects.
Yeah, I would agree 100%. And I guess part of the thing that I'm seeing, and I don't know whether you're seeing it in many of your clients, is actually creating project management specialists who can take on projects. Now, they have to have some domain expertise. You can't just say you're the jack of all trades project management specialist, because you do need to understand some things about systems. You may need to understand things about implementing new training programs as a practical matter. So having this capability is pretty critical. It's also fair to say that bankers, relationship managers, need to develop project management skills. I remember seeing something not too long ago that talked about the key competencies of people who are managing major relationships in banks. And one of the things is you've got to know how to manage the project, which may be moving lots of different things along with your clients.
Yeah, we help the client. Sometimes you can bring on vendors to increase your capacity, and we've been brought on in that capacity. For example, to implement a loan operating system, and the executive sponsor was the chief lending officer of the financial institution. But there were, of course, if we're setting up the processes involved in getting a loan through the new loan operating system, we had lenders involved in those projects. So, and credit people. So we did have folks involved in the project. And there are ways to expand your capacity. I had mentioned that, we really have to take a critical look at what we're doing in our financial institution to be able to create that bandwidth for people to execute on projects. But they could also call in vendors. And a lot of times vendors, because most projects these days involve some sort of technology solution. And, vendor management is part of that, not the vendor management from a regulatory perspective. But if a vendor says in the solutions contract that they will dedicate X amount of time, then they ought to be available to the project team.
Let's talk a little bit about data, because this obviously ties in. One of the challenges that a lot of community bankers face is extracting data from their core systems. But you've worked with a number of banks to try to help them do that. What's been your experience in terms of helping people mine data in their systems?
It's so every time we do a strategic plan, we ask a client for any customer analytics they have that answers the question, other than anecdotally, who are your customers? And so few can actually provide that information. They don't have very good analytics on exactly who their customer base is. So let's take, for example, how many times do you go out and the shop owners or what have you have a square or block merchant machine? Well, that's one of the most expensive merchant machines out there. And if a banker sees somebody that uses square or block, depending on how it's characterized today, that should be an automatic opportunity for them to talk about their solution if they have it. But if you ask a bank, say, all of your commercial clients, please provide me with the list of commercial clients that do that money comes in or money goes out to Square or Block, and they can't do it. They can't provide it. So wouldn't that be nice to know one of the most expensive solutions out there, that 5% of your commercial customer base is using it, and here's our calling plan for those customers to be able to get an opportunity to show them our solution and how much money they could save using our solution. That's how you put data into action. That's, data is almost like a buzzword now at conferences, Ned, right? But this is how we put it into action. You'd be surprised at how many clients only put industry codes on commercial customers for loans, not on deposits, because for loans, they need it for their concentration reports. But you have to be able to think when you're onboarding clients, not just what I need for compliance purposes or what the core demands, but what will I need for marketing and sales in the future? And we have to change our mindset on that when we onboard customers. But we also have to take on those data projects, back to project management, right? That says, you're a commercial lender. Here's your book of relationships. I want you to go through your relationships and make sure every one of their deposit accounts has an industry code on it. Or you could connect relationships between this account and that account. So we need to be able to take on those data projects, which it gets to, we need bankers to have the bandwidth to be able to dedicate some amount of time to do that. And we have to put a data governance policy together on exactly what field we're going to use, exactly how we're going to enter it, et cetera, et cetera. But the best way to eat an elephant, Ned, is one bite at a time.
Good advice. You also have obviously encountered, as I have, a lot of banks that really are in the dark when it comes to the profitability of relationships, which is a data problem. How do you help people deal with that?
Yeah, so our biggest competitive in our profitability outsourcing service is doing nothing. So, they're very content with using their general ledger for measuring their Market Street branch's profitability. Well, the Market Street branch only has interest expense. They don't have interest income, right? And then they have their budget. But if you were holding that branch manager for continuous profit improvement, or to get to be from the bottom quartile branch profitability to at least at the median of branch profitability for your peers, that gets to incenting the branch manager in the right way, not the open close ratio or the gross deposits, but in the right way. So yeah, in terms of data, our biggest competitor in our profitability outsourcing is doing nothing. So they're just content with their system generated reports that they have. We actually encourage them to do lender profitability. If you think about how that incentive would work, you're not only generating spread from your loans, but now you're generating spread from your deposits. So what a great way to incent your lender is the continuous profit improvement of their loan book. But they generally would measure the effectiveness of a lender based on volume.
Yeah.
So,
which, again, can, as you and I both know, can create some
misalignments. Yeah,
definitely misalignment. So
yeah,
let's talk a little bit to that issue, because it ties into employee development and creating the right kind of incentives for bankers, whether they're branch managers or commercial lenders. How do incentives tie into employee development issues?
You just make things consistent with your strategic plan. Getting back to the lender being incented on volume, what if the bank is below peers in terms of their net interest margin, and they want to be above peers in their strategic plan in terms of net interest margin? Well, if they continue to incent their lenders on volume, they're fighting against themselves, right? Instead of maybe one of the incentives would be increase the spread of continuous improvement in the spread of your loan book. Now you've aligned the lender's incentives with the strategy of the bank. But then you get to all right, you can't just put an incentive in place. You got to tell them or develop them to be able to understand the levers to improve upon those ratios, and put the support of marketing behind them being able to do it. So if I'm in the lowest quartile of spread in my loan book, I want to know, how do I improve that through sales? How will marketing provide me the air cover to help me do that, in terms of identifying those customers that are square or block customers, and maybe geofencing them around the territory that I'm designed to cover. So that way your employee development could be on how to be a better salesperson, how to be a better writer, to write content, that we could provide content for you in those sales calls. It could really revolve around strategy all the way down to the individual employee.
Yeah, it certainly has the potential to turn a banker into perhaps a more valuable resource. And at the end of the day, when you think about how people are going to stand out in the marketplace, it's not usually the products that differentiate them. It's how they, in fact, are able to deliver them. So the value proposition for a lot of bankers, sort of comes back to, you are the value proposition when you think about it.
My first job in banking was 1985, Ned. I used to be the youngest person when I would teach at banking schools, and now I'm like the oldest person. My first banking job was 1985. I was young at the time, but I thought back to what the products were in banks back in 1985, and quite honestly, they're not materially different today. So when people talk about product development in banking, I don't know what they're talking about. It's like, we still have CDs. I understand we have different distribution methods, right? We have different features to these particular products, but it's still like checking accounts, savings accounts, CDs, commercial real estate loans, business loans, mortgages, consumer loans. Really, what products have we changed? But the value we can deliver to customers in an increasingly complex financial world is probably what you're selling for your bank, is the selling of yourself and the selling of your financial institution, which, by the way, gets to that higher purpose and that stakeholder primacy that I was talking about. Would you rather do business with a financial institution that is trying to end homelessness in the markets where it's operating? Wouldn't you rather do business in that? Minimally, wouldn't you rather deposit your money in a financial institution that's likely going to lend it into the same community where you live? And I think they're all interconnected.
I think they are. And I appreciate, Jeff, your insights and your wisdom. And I know that in thinking about the ways the industry can get better, you're always coming up with interesting ways to talk about them. Are there any things that you would point people to at the Kafafian Group in terms of resources that they should take advantage of?
Yeah, just like this content here, Ned, we do a podcast. They should go visit wherever they get podcasts on their phone, the podcast thing on the telephone. They could listen to This Month in Banking. We try to have interesting people every month. Last month we had Freedom Bank in New Jersey, the CEO there, talking about how to attract small businesses.
I've listened to the podcast and I think it's well worthwhile. I'm glad you pointed that out. So I'd encourage people who are listening to take a shot at listening to that podcast. Jeff, I want to thank you for joining us today on this NedTalks, and thanks for all you do for the community banking industry.
We're interested in keeping banks around, Ned. So thank you.
Amen.